going on, everybody, and welcome to the video. In this one, we're going to be talking about a stock that I am buying right now. I see a lot of upside potential in this company, a great value play in my personal opinion. But remember, just because I am buying a stock does not mean that you need to go buy a stock, or if any YouTuber is, does not mean that you need to, okay? So I'm going to be giving my bullish case, but I am also going to be talking about some bearish things, No company is 100% perfect, and you can't guarantee that it's going to go up in the market. But before I get into this video, all I ask that if you do enjoy this type of content, that you subscribe to the channel and you turn on post notifications so you do not miss out on any of my future videos. But let's go ahead and get straight into it. So the stock we're talking about is Take-Two Interactive, ticker TTWO. I really like this company. I'm sure you've heard of them. They're a pretty big company. I believe they're 16 point something billion dollars market cap. We'll go ahead and see $16.62 billion is their market cap. Trades for just below $99 a share. Over the past year, the stock is down very bad, 45%. Compared to its industry, the gaming industry and just interactive media, it's not down as much. I believe the average was like 47, 48%. So it is doing better in that sense, but not by much. What this company does pretty much is they create video games, mobile, PC, console, and they sell them. A very simple company, which is another reason why I like this stock for a value play. Let me go ahead and show you a little bit of why I like them. So their trailing 12 months PE is about 59.73. This is data from Yahoo Finance. We go and see more from their forward PE. It's 15.48 with a PEG ratio of 0.33. A PEG continuously decreasing is a very good sign, and the forward PE decreasing as well is also another sign of we're seeing some value. Now, if we look on Seeking Alpha, the forward PE is about 24.65. Data comes from all these different sources, so it's in this range, which is still pretty good value, in my personal opinion, for this stock, especially with seeing how down it is. Now, to show you more on who exactly this company is, leading multi-platform developer, publisher, and marketer of interactive entertainment, the strongest growth segment in the entertainment industry. They own a ton of brands. They've been making a ton of recent acquisitions. Their biggest brands are going to be Rockstar, 2K, Private Division, and then Zynga. So you can see Rockstar is very big. Think about the biggest games that they have right now is going to be Grand Theft Auto, Red Dead Redemption, and this is under Rockstar. And then under the entire company, you got NBA 2K, all those games. They sell a lot of very popular games, and they have a ton of mobile games as well, and they seem to be doing very well in this market. So let me go ahead and show you the global video game market in billions of dollars right now in 2022 to 2023. That's a big growth from $235 to $249 billion. Remember, this is a $16.6 billion company, so they do have that opportunity to just take in more market share per se, and it's continuing to grow. Video games, I don't see them leaving us anytime soon, especially with metaverse and things like that. This could be very, very well. So a few key metrics I want to show you is there are about 3 billion global video game players in 2021. Entertainment, this market was measured at 221 billion in 2021. And furthermore, global gaming market, mobile gaming market is just 131 billion. Remember, this is just one of their tiny sectors, the mobile gaming compared to PC and console as just a tiny part of it. Let's go ahead and show you some more. So first up, Rockstar Games, they got Grand Theft Auto, which is going to be massive. Another catalyst onto why I believe this could be a very strong buy. And it's something that I plan on holding for at least a few years. I can't guarantee how long I'll hold it. Who knows, if things go in the opposite direction, I might sell. But if things go as planned, I think the launch of Grand Theft Auto 6, which is supposed to come out in about 2024, there's a lot of anticipation. This is a long play game, is going to be very big. Okay, GTA Online right now is making them, I think it was almost over 500 million in revenue last year, and a lot of analysts are expecting over $1 billion for GTA 6 Online, which is going to be huge. They also have Red Dead Redemption, which is a very big game as well. Sold over 70 million units worldwide. So this is going to be very, very big. Okay, I see this as a huge upside potential company. Furthermore, with the World Cup and they own FIFA, this company does Take-Two owns FIFA. I think this is going to be just major launches and good on top of good on top of good. Now, let me go ahead and show you their 2K franchise. NBA 2K, these are big games. NBA season going on right now. People love this type of stuff. 2K23 recently came out. So we're seeing a lot of good things happen for this company. And I do believe they will continue to go on this good path. So their mobile games, we'll go ahead and show you CSR Racing, Empires and Puzzles, a ton of big games as well, such as Words with Friends, Zynga Poker, Social Slots. Big games that are being downloaded at rapid rates. Show you some furthermore. Here's kind of what they've done over the past year, and they have a very big pipeline. Not only do medical companies and pharmaceutical companies have pipelines, these video game companies have to have pipelines. It's like the medicines are the video games. And right now, GTA 6, which I believe will be very big, is something that they're working on at a consistent rate, which could go very, very well. They've had a ton of launches launched out this year. I mean, 2K23 was a big one, PGA Tour 2K23, WWE, Grand Theft Auto the Trilogy, a ton of different games being launched. And then we have more being planned to be launched in the near future. And we keep going a little bit further in this. We'll see promoting engagement and growth in recurrent consumer spending, key growth drivers. Just something I wanted to highlight. Drive virtual currency sales in existing games, with NBA 2K and GTA Online the two largest individual contributors to RCs. Huge potential in this one. I really do believe it. With GTA 6 coming out as well, will be massive, especially being able to buy at this cheap price. And looking at the valuations, this does seem pretty good, but remember, nothing is a guarantee. Okay, a few things about their financials. We expect to deliver over 100 million in annual cost synergies, savings within the first 2 years post-close. They went through some mergers. They had to increase selling and general administrative expenses. It did increase a lot, but their sales still have increased. Their earnings were not the best, though, per se. I'm not going to sit here and act like everything's perfect. But here's some recent acquisitions, with Zynga being a very big one. They are already in their 2023 fiscal year. But looking further into this, long-term net bookings growth has continued to grow. We're seeing a 14% CAGR from 2018 to 2022. And we're seeing a lot of recurrent spending as well, which is going to be very, very important for this company. So to continue showing you a little bit more, I want to show you the company's financials. Okay. Also, furthermore, as you will see, the earnings have not been the best, but that performance is partly driven by weakness in the wider video game industry, which is being pressured as consumers take a step back from digital entertainment following the pandemic spikes in 2020 and 2021. So let's go ahead and talk about more on their financials. Revenue is still doing very good year over year. Trailing 12 months, 4.3 billion, very good. Gross profit is still very good, but their operating expense is where it's hitting them. Okay. So as we can see, operating, selling, and general administrative increased incredible amounts. $700 million is no small amount, and it increased due to acquisitions and things like that. But the company is still having positive cash flow. Okay, I'll go ahead and show you. Free cash flow, as I said, is negative, but operating cash flow is big. It's still very small, but it's a number of reasons. Selling general administrative expenses, they paid off of a lot of investing cash flow. So let's go ahead and show you some more. Analysts do expect this company to do very well in earnings per share wise, from $3.99 to $6.19, and then revenue to grow by 27% over the next year, which is going to be a massive growth rate if they can achieve this. And to furthermore, a few things that I really liked was looking on Simply Wall Street, trading about 36.4% below our estimate of fair value. Earnings forecast to grow by 78% per year. Analysts in good agreement that stock price will rise by about 37%. The only risk analysis, if you go check all of these out of everything that they show, was have shareholders been diluted over the past year? And they have, okay? But I don't necessarily see that as a major concern, especially if the company is doing things in the right way, unless they're diluting at absurd rates. On another website, Alpha Spread, we're seeing intrinsic value being pretty good, undervaluation on a base case of $132. Worst case, we're seeing it's overvalued, but this is a very unlikely situation. And best case, undervalued by 72%. That'd be a massive return, okay? Remember, this is from 99 to 353. You'd be making massive money. And from 99 on the base case price to 132. That's still very, very good money. Let me go ahead and show you a little bit more. Price targets are looking very good. We're seeing a lot of upside being provided recently over the past few months. The average is about 36% upside to maximum of 75% upside, with the minimum being 0% downside, like pretty much its current price right now. And the last thing I will show you is the institutional inflow to outflow. A lot of money is being poured into this company recently compared to being sold, which is a very bullish sign. They say follow the money, but just because institutions or analysts like a stock does not mean it's going to perform well. Oftentimes they are wrong. I just like to show the point of this channel is for me to give you all the information that I can in these videos. But that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future content. Thank you for making it to the end of this one. Check out my Discord server. Links in the description down below. Also get some free stocks, some free money using those links as well. And I will see you in the next video.